Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Potts. I This is episode 6. This is the pound SGD. I remember telling you guys about uh, these lines that I've created, these two red lines that I've created, and I was expecting the market. I said the what do we call it? The market sentiment had told us that the pound SGD will give us an economic divergence, and I think we were up here. We touched this level, and I was telling you guys that I was expecting the market to tap within these two red lines, and my best expectation was below this blue line, the trend line, because we have two touches on it, and normally the third touch breaks below this level. Normally it goes below that level, and I said if I get this, I would be much happier with the market moving higher above this level. This correction level. I'm sorry about this. I would be much happier with a break to the upside. Remember, this is a rally, base rally. We're expecting a rally higher. This is the other rally. So we're expecting this replica, the replica of this to happen up here. This is the arm of the second replica of this. So we're expecting the same distance from here up here in this economic divergence. So that's the trade that we're looking forward to. I finally got the it's 12 midnight at the moment. Let me show you. This is the daily time frame, and today is the 30th of July, 2025. This is the new candle that we have. It's like midnight at the moment. So I'm expecting this second candle, this second daily candle to at least pull us down here on the blue line, even if it breaks below it, even if it doesn't go that low. I'm expecting a tiny pull into this. The daily time frame is not easy. Well, I'm trying to show these things. Uh, this part here on this purple line is here, and the pullback is up here, and this leg is this small daily candle that is forming here. I'm expecting it to, at this moment, it's here, and I was expecting it to at least wick this blue line. I'm expecting it to wick this blue line so that we can be able to break out of this level. So I was talking about economic divergence, and I think I should explain what economic divergence is to you guys. So at this moment, if you can check this, let's say I was holding yesterday this trade, and you can see here that it stopped me out because I normally move my stop loss to break even. Just like here, you can see we broke the next high, and I'll be holding this all the way up there with my stop loss at least up here. And when it does this, normally it would stop me out. So economic divergence Sorry, let me show you something about economic divergence. This is like the GBP. I'll put it separate here in capital letters. GBP, and we're going to have another SGD here. So when we trade in these arbitrage opportunities, uh, we look at a currency as an individual. So I'm going to do a research on this currency separately. I'm going to this is the bullish candle, and I'm going to do another research on the bearish on the bearish. I'm sorry, I said a candle on the bearish currency. So what we do is that we're expecting a bull run on the pound, and we're also expecting a bearish run on the SGD. So our intention is that, so this is what we call an economic divergence. This economy is improving and this economy is deteriorating. So this is what we call an economic divergence. So the direction for the trade becomes a long position because these two currencies are like two guys trying to, I don't know how to call it, trying to outcompete each other with a strength. I don't know how to explain it. One, two guys are trying to uh, outcompete each other when they're having. I don't know what is how to explain this, but it's just the other guy is pushing harder, is getting stronger, and the other one is getting weaker. So normally the market would move towards the currency that is getting stronger, which in this case is the pound. And in this pound, we have a positive carry. We have a positive carry. Uh, so a positive carry is when, sorry about that. A positive carry is when the swap gives us a positive number. Let's say the positive number is something like plus 2.5% of interest. That means if we're going to be holding this trade on a daily time frame, on if we're going to be holding this trade long, we're going to get paid 2.5% for each day that we hold, which is something like 23 days in a month because the market opens 5 days a week, which is like 4 weeks plus 3 days. So normally we're going to get paid this for the next 23 days in a month. So that's normally my trades are held long daily. Are held long for at least a month. If I was holding a trade, I'll be holding it for at least a month or 3 months or above that. Even at this moment, the US dollar is getting weaker. So this was supposed to be the pound USD. Unfortunately, because the USD, the interest rate on the USD is a little bit bigger compared to the SGD. Swap, we get a negative swap, which is like 4 point something percent, negative 4 point something percent, which is a loss at this point. So with the SGD, we're able to get a positive carry, even though the SGD is not yet ready to be sold because normally there are certain times in a term, which is a 3 month term, that a bearish currency would take off. Maybe it's not supposed to take off now. It might take off later, but Either way, we're going to hold this currency because this is the only currency at this moment that is doing this. The CHF is not ready, so I'm not going to use the CHF. I'll be using the SGD. SGD for now. I wrote SGF. No, it's an SGD. It's not an SGF. So I'm sorry for that. So that's what we call carry trading. Carry trading is the system that we're using. What we carry is the interest, the positive swap. That's why we call it a carry trading. This positive 2.5% is the carry interest that we are holding for each day that we hold this trade long. So at this moment, we are having this market playing around. I always advise my people to have a larger stop loss. If you can have a larger stop loss, it becomes much easier for you to hold your trades. And larger stop losses are accompanied with smaller lot sizes. I believe in small increments and losses. So because my trades take much longer to mature, I believe in taking small losses because the take profit is far away from where we are. It becomes easier for us to make profit if we can just hold that trade for the given time. Let's say I was holding the trade for from here, I would still be holding, even though this is like yeah in January 2025. I would still be holding this trade until it gets to this is the rally base rally until it gets to the second rally, this rally, until we get this piece up here. So that means I'm gonna be earning this positive swap. I'm gonna be earning this positive swap from down here. This is the daily time frame. From down here each day that I'm holding and all the way up there. All that I have to do is hold the currency. So that's the system that we're using, which is carry trading. You can make a lot of money out of this. However, you need to use a smaller lot size and survive with 1,000 deaths with one attempt to taking a trade. You can just take a trade once and make all of this money. Even if you take 10 losses, you can still survive in this trade. Why? Because of the positive carry and the distance that we hold our trades. Normally, my trades are visible on the weekly time frame. That's how I hold my trades. Are normally visible. Since 2022, we've been having positive growth, consistent growth in the pound, and the Singapore dollar has been deteriorating a little bit along with the actual US dollar. Sorry about this time that I took, but bit by bit, guys, I'll be trying to explain to you what I'm doing in carry trading and market sentiment, the commitment of traders, the COT reports, the relationship between the unemployment rate, GDP growth rate. I'll be trying to explain all of those things. Those are inflation, interest rates, how the interest rate cuts and hikes are related to the movement of the markets, how they move the markets, especially the interest rates. So, and of course, the what was I going to say? I forgot what I was going to say. But those are the fundamentals that we look at. So see you guys. I'm running out of time here because we are already at 15 minutes. So this is episode 6. I will be seeing you guys on uh, the seventh episode. Goodbye.